Hi, everybody. Welcome to today's webinar with Red Piranha. I'm Ellie. I'm one of the campaign managers here at Birchal. And just before I introduce Kane, I would like to acknowledge the traditional owners of the land I'm coming to you from today. Birchal is based on the lands of the Wurundjeri people of the Kulin Nation, and we pay our respects to their elders, past, present, and emerging. Today, I'm joined by Kane from Red Piranha. Birchal is working with Red Piranha on an upcoming crowdsourced funding offer. So, what is crowdsourced funding or CSF? Crowdsourced funding, or you may know it as equity crowdfunding, is a relatively new form of fundraising in Australia that allows startup and small businesses to raise capital from a large number of smaller or retail investors and wholesale or sophisticated investors through an online platform, which is Birchal. Instead of seeking funding from traditional sources such as banks or venture capitalists, companies can turn to the general public, often their communities, to raise in exchange for equity in their business. Birchal Financial Services will be the licensed intermediary for the offer. The information and discussion in this webinar is for informational purposes and should not be considered as advice or recommendation to invest. Please do your own research and always consider the offer document and general CSF risk warning before investing. And if you want to know any more information on that, you can head over to our website at birchal.com. Now, how today's session is going to run, Kane is going to take us through a great presentation, which will be about 15 to 25 minutes, all about Red Piranha, where they've come from, what they're looking to do with their capital raise. We will then switch to a Q&A session. If you look to the bottom of your Zoom screen, you'll see a little Q&A bubble. If you have any questions during today's session, please just pop them in the Q&A box as we go along, and we will answer those during the Q&A session at the end. We are recording today's session, so if you have to jump off early, a recording will be sent around. So without further ado, I will hand you over to Kane.
Thanks, Ellie, and good afternoon to all those on the eastern seaboard, and good morning to those in the west. My name's Kane Bennett. I'm Executive Director of Red Piranha Limited. We're an end-to-end security company based out of Perth, Western Australia, with offices in Melbourne, Sydney, Philippines, and New Delhi in India. We engineer, develop, and manufacture advanced cybersecurity products and integrated support services on a global scale. We're Australian solely owned, and we develop all our own IP. And we have the ability to manufacture at our facility here in Australia with Australian-made license, and out of our facility in New Delhi in India for the domestic market there, and any international clients in the Northern Hemisphere. That ability has really opened our capabilities up for sovereign development here in Australia, but also the domestic market in India. And it really does uniquely position us as a security developer in Asia-Pac region, with no true security provider that is in the region or born out of the Asia-Pac region. All of them are out of the US, or some out of Israel, the UK, Europe, but none in India, and certainly none in Australia. We're recently named Australian Technology Company of the Year at the Australian Technologies competition. This is quite a rigorous competition for scale-up companies. Even to be eligible for application, you have to produce a certain amount of revenue over a certain period of time. And after 136 applicants whittled down to 62 semi-finalists, we won our category in cyber and critical technology. And then we took out the overall Australian Technology Company of the Year. And nice validation for the team, and certainly around the product. It was an 80-page submission where you certainly have to go through your full validation of your product in itself and your business model. I'll go back to our founder, my brother, Adam Bennett. Red Piranha is really born out of frustration. Unfortunately, Adam can't join us today. He's in a meeting which we're unable to move around. But Adam's our CEO and founder. He was working for Cancer Council Australia and was given the task to put in a technology stack for them way back in the mid-2000s, and just couldn't, based on the price point that was available in the market. So Adam went about developing his own technology stack, and from there, the Red Piranha operating system was founded. Essentially, we're solving a problem, and the problem was recognised way back in early 2000s as the way that cybersecurity paradigm was shifting was that everyone was concentrating on producing one single tool or being what's called best in breed. Now, what that's created, and Gartner states that the average organization now has 76 different cyber solutions to manage. And in most cases, they just do not operate in synergy through architecture. So the solution is what's now coined a consolidated security platform, or a CSP. And the result is security infrastructure that's unified, easy to manage, less costly, and future-proofed. And Gartner also states that 83% of organizations are now pursuing a vendor consolidation strategy. Unfortunately, this has created problem number two, where a CSP requires a very wide set of products and services. And the global players, the billion-dollar market cap companies, have been too far down their architectural line to go back and start from the ground up. So they're putting their CSPs together through the legacy acquisition model. And to give you an example, Palo Alto is the largest security company in the world. It made 21 acquisitions on this, spending close to $4.5 billion over the last 2.5 years in itself. This is a legacy approach, as CSPs require multiple data sources, and if they're not integrated in synergy through architecture, then this creates fails to capture the query and exploits. So this leads us to the Red Piranha solution, and the way it's been designed is from the ground up. So we have every single system in our product has been developed by ourselves from the ground up, even from the simple systems of a CRM or an ERP. We've developed everything, our online store, to really limit those third-party APIs where you have most of your vulnerabilities going through your system. So the architectural forward thinking in its platform, which we call cybersecurity mesh architecture, allows us to standardize response and security and distribute architecture that's flexible, scalable, and reliable, and prevents hackers from exploiting different parts of the network. We have 150 plus systems, which is in this green area, or our backend SOAR Orchestrate. And to give you an example, Palo Alto put together their SOAR Orchestrate that did this through a $500 million acquisition of a company called Demisto. And we built that first before we even started working on the front end product. As such, we've taken out what's called the RSA Information Security Awards. They're based out of San Francisco every year. They're the most coveted in the security information space. And 4 years running since we went commercial, we've taken out these awards, beating out billion-dollar market cap companies in Palo Alto, Cisco, and Fortinet. Well, let's go through our history and our pathway to commercialization. It's a little bit different to most. A lot of people go to market straight away and build their product as they go. We really set out a product development phase from the ground up with a prototype way back in 2016. We actually first started forming it, and then went through our alpha testing, beta testing, and then rigorous years of live testing before we actually went to market during 2020, 2021, right during COVID, which was an interesting time to go to market. We've now completed stage one of our go-to-market strategy. And look, as a new security developer, even if you have the best product in the market, you're certainly not going to go write $1 million contracts straight off the bat. You really have to take a staged approach, get your market proven get your product proven in the market, but also gain your capacity and maturity as a security developer before you can take on those larger companies. And we had a very deliberate go-to-market strategy in the early 2000s, 2020, 21, which was to go to target high compliance small businesses to gain our traction and credibility as a security developer. So really started off in small business space. We've now moved our focus to where there's a massive glaring omission of security products availability, and that's in the mid-market. And at the same time, we've picked up contracts with Australian government and defence, and recent contract wins with enterprise logo customers listed there on the left, WA Police, Austral Ships, which is a defence prime contractor out of Western Australia, and $2 billion market cap companies out of the US, Buckman Chemistry and Beam Suntory. It's been all on the back of no marketing, or very little to no marketing, certainly in the US, very little to no little marketing here in Australia. And we've done this with a non-dedicated sales team. We've put all our investment to date into building the product and building our support and delivery systems first. And now we're ready to really commercialize the product and transition, as I call it, from a developer, technology developer, to a technology sales company. Our customer base is scalable. We've proven that already as we've sold from small businesses right through to enterprise. Our total addressable market is $30 billion, and that's just in network security. And we've analysed our serviceable market as a target 0.5%, which is 150 mil. Our revenue to date is 9.6 million since inception and 100 plus customers. So as I mentioned, we're now in our second phase of commercialization, which is that transition phase from a technology developer to a technology sales company. So what does that mean? And what are the challenges that we're faced to really transition over into sales? And it really comes down to now we're moving our predominant investment into that sales and marketing team, which we've never done previously. So going through our sale blockers, which we consider our risk and challenges, and we conduct our risk committee every 6 weeks, in addition to our board meetings every 8 weeks. And what we've identified and certainly have our strategies in place is our first major sale challenge is adoption of new technology. And the age-old saying in the technology space is no one got fired for putting in IBM, even though back in the day IBM was more expensive, wasn't necessarily the best product, but because everyone was so comfortable and used to it, IBM, most procurement stages just went with IBM for the sake of it. That's the main challenge that technology companies face, is that adoption of new technology. And the way you overcome that is through gaining awards, certifications, validation, and then providing a business that's attractive to get industry expert salespeople across to your business. We also have key person risk in Adam. Our CEO and founder was obviously the developer of the operating system. If he was to get hit by a bus, we needed to put measures in place for that. And being my brother, that's certainly not something we'd wish for. We've certainly gone about doing that over the last 4 years in that stage one of commercialization, putting people or ring fencing around our operating system to allow multiple people to be across this. We've now attracted industry expert salespeople as of July this year, after gaining sort of X amount of $1 million in revenue. They're now interested in coming to work for us. You don't attract salespeople into your business unless you already have a portfolio of sales for them to sell and to come into. And obviously capital. More capital you have, the less challenges you have. But that's a balanced approach with dilution of shareholders and so forth, and something we've been working through since our inception. So back to that validation of our product. We now have 50 plus Gartner reviews, and anyone who understands the technology space will recognize that Gartner reviews are very difficult to get. They're not as simple as a Google review. They're multiple page reviews that customers need to complete. You can't get these through B2B customers. They have to be the end client, and very difficult to get your end clients to do this based on the rigorous process that Gartner puts them through. So thankfully, we have 50 plus very happy customers. We've got a 4.8% star rating, and we're competing and showing validation against billion-dollar market cap companies. I've mentioned those certificates and alliances, and the main one to really point out here is the one in the middle up the top, which is our Cyber Threat Alliance, which is based out of Washington. The Cyber Threat Alliance out of Washington is a consortium where all the major security companies in the world get invited to submit what they call incidents of compromise or threat intelligence. And all of this threat intelligence is collated and then handed out to all the major companies and security agencies throughout the world. So your banks and ASD, Australia Signal Directories, and ASIO, et cetera, et cetera. Now, we were the first Oceania company invited into that Cyber Threat Alliance, and it really does indicate how much we're punching above our weight here. And as far as threat intelligence goes, we're ranking in the top 3 against billion-dollar market cap companies globally for threat intelligence, and it really does justify our platform and threat intelligence and incidents of compromise that we're collecting. There is still only 2 companies in the Oceania region to date in the CTA. I'm not going to go through all the awards, but they're a major process in validating a product, and we've taken out many awards. That's only just a few of them. There's certainly many more that we just couldn't fit into one slide. The next part of that step of risk and challenges is getting across industry experts into your sales team. And it really is a challenge, and certainly been a challenge for technology companies over the most recent years. If you go back to 2021 and 20, the employment market was the hottest I've ever seen in my lifetime. And getting across technology industry experts from a sales perspective was near on impossible. Thankfully, the employment market has cooled slightly, and and we've gained enough revenue now to attract people of the caliber of George Bullis, who joined with us in July. He comes to us from our main competitor, Fordnet, as our Global General Manager of Sales and Marketing. Since George has started, he's managed to bring with him a couple of his key salespeople, one starting in September, another in October, really adding to that point of transitioning to a technology sales company over the period of the next 12 to 24 months. I'll go through just quickly our executive team and board and our broader team in general. We obviously have Adam, our CEO and founder, Anthony Blackman, our operations manager. Great, now we're scaling up to 50 odd people. So we have now Helen Rollinson from Commonwealth Bank as our Chief People Officer, which is a real key component of your business. Anyone who's been involved in a startup that transitions to a scale up, once you move outside of that 20 plus staff, you really move away from that family size business. And one of your biggest challenges is staff retention and managing staff in general. You get distracted from running your business to handling your staff, and Helen was a major acquisition for us coming from Commonwealth Bank. And of course, George Bullis on the sales team, starting with us more recently in July. Across to our board, we'll certainly keep our expenses down with no disrespect to the board, because I'm on the board. I obviously manage from the founder's perspective. I was the first investor into the business after selling my business in 2012. And we added Matthew Cantella as an early director. He was one of the original founders of a company called Corporate Travel Management. After 13 years, they successfully listed on the ASX for $1 and now trading in double figures. And Matt's certainly been through that phase as a founder and listing on the ASX, and is now the owner of the largest private medical cannabis company here in Australia. We added Rosemary Milkins on recently as our independent chair. Rosemary comes to us as ex-deputy police commissioner and really adds that corporate governance as we gear up for a potential listing. We also added David Richardson, who's been a CFO and company secretary amongst many ASX-listed companies over a very, very coveted history of and experience over the last 30 plus years. We're looking at our broader team in general. We really have gone about building the team first here in Australia, in our second subsidiary out of India. So it's that mixture of predominantly Australia, second is India, and then we have a mixture of staff globally from the Philippines to the UK, across to Canada and the US, to really have that 24/7 eyes on glass approach. We run 24/7, 365 days of the year, as security does not stop for holidays or breaks. To give an indication of the success of our team, we have a 95.3% retention rate, which is in this climate is phenomenal. We've also been working with the major tertiary institutes, predominantly out of Western Australia, where our headquarters are, Edith Cowan University, North Metropolitan TAFE, as an example, to really have that flow of staff come through our business. And then we certainly look at internal promotion as that main driver of staff retention. We're now working over here in the East Coast, where I'm based, building out the team with George and other sales staff as we now build out our East Coast presence, and obviously our Melbourne office as well. We have a mixture of staff by full term and staff by contract. And the reason why we utilize contractors is to really pull levers on and off from a development perspective. For the last 6+ years, we've very much been a technology development company. To have contractors to come in when we want to really boost up R&D in certain aspects of our company and then turn those levers off is why we've had a contractor-based employment structure. The average tenure is 3.49 years now, and we certainly have a healthy percentage of 26% of gender female, which is it's a really good result in the technology space and something we're quite proud of and working towards and continue to work towards. To go through the financials, as I said, we went commercial in that 2020-21 or financial year 21, converting over our live clients who were paying cost price at the time, mainly friends or family of us to take our product, put it into their live networks to test before we went commercial. But since going commercial, we've grown 82%. We grew 13% last year in the small business space, which the New South Wales Auditor General report indicated that there was a decrease of spend in cybersecurity by 22% last year, even though the risk was going up just due to the inflationary measures that's been put in place in our country. So 13% is on top of that 22% decrease in spend was a great result, but really indicated to us that we need to transition into that mid-market, and government and enterprise contracts are moving away from that focus small market as that deliberate go-to-market strategy in the early days. So just in summary, our business model is now being proven. It's across SaaS or on-premise, depending what the client requires. It's a land and expand model, so we're not required to rip and replace product. And it's a scalable product from small businesses right through to enterprise. And we've had a very core focused market that we've concentrated on, obviously in the high compliance space. And as we transition into that sales company, we've grown our pipeline 5,000% in the last 6 months alone. So up from 1.9 million at the end of 2023 to currently 95 million plus. And our last look that George provided to the board was 97 million last Friday's meeting. So our focus now as we transition to that technology sales company is really accelerate growth and recognise that existing pipeline. Our use of funds, well, I know it sounds boring to utilize the term organic growth, but it's the safest growth, and that's where we'll be really focusing over the next 12 to 24 months as we create that clear pathway towards profitability. And we really want to grow the markets that we've established ourselves in. So obviously Australia and India, and those broader markets in Asia Pac and the Middle East. We want to spend most of our funding in the sales and marketing space, and whilst we will always continue R&D, and we've still allocated 20% of funds to R&D, the majority will be going into the remaining growth stages of the Asia Pac and MENA, and their organic growth in Australia and India in sales marketing and the service delivery that's required to grow and accelerate those sales. But as we've seen in the recent industry reports, the Asia Pac and Middle East are the fastest growing in network security, and that's because there's been a glaring omission of domestic players in those markets. So as I mentioned right at the beginning of this presentation, we are really uniquely positioned as a security player in this region. And our major growth opportunities, as I said, that expansion in Asia Pac and MENA, we will tiptoe into the US at the moment, although as far as market share goes, that equates to about 60% network security market shares out of the US. So it's not something we want to go into half-baked, and certainly not something we're going into full steam ahead at the moment. We're concentrating on markets that others are not at the moment. One that we're really focused on at the moment is the Middle East, and we've just been invited and we're entering the early stages of an MOU with the private office of the Royal Family of Dubai to partner with them, as we'll provide obviously the technology, and they'll provide the business development, sales and marketing into not just the UAE region, but the broader Middle East region, which is a huge coup for the business going through that selection criteria process, and a massive opportunity for us. So we want to continue to scale our product more into the mid-market now and tiptoe into the enterprise and government space. And with investment, we'll scale through to take that target market share of 0.5% or 150 million over the coming years. So I hope that's given you a good overview of the business. Look forward to the questions that everybody may have, and yeah, really appreciate your time and the expression of interest. Thanks, Ali. Back to you.
Amazing. Thanks so much for such an insightful presentation into the background of the business. And yeah, I'm super excited to get into some great questions that have come through. If you haven't already, please pop your questions into the Q&A box now if you want to go into any more details of the points that Kane mentioned. So just starting off with the first question. Please advise sales and profit growth percents and I have to add on to date there because we can't talk about any forecasting here. If anyone attending the webinar wants to know any more details, you can have a look at that in the offer documents when the offer goes live. Yeah, so over to you, Kane.
So as I went through on the sales and expenses slide, we have 13% most recent year and 82% since going to market.
Wonderful. And then he had another point to this question actually, which is India a key target market?
100%. We are now considered the first indigenous firewall manufacturer in India. Now that we have our license India made, it really made sense for us. We were certainly utilising services out of India in our early stage of product development. So we already had boots on ground. With the recent collaboration with the Australian government being part of the Commonwealth, where we certainly have to have everything approved for defence through our defence export licence. We decided to set up our manufacturing and our private subsidiary for the Indian domestic market out of India rather than exporting from Australia. That allows us to concentrate on the Australian and Indian market separately through our parent company here in Australia, our private subsidiary in India. And then we can service other companies in the region. We mentioned the MENA region, certainly the Middle East. It's close to India, so we can service sales and distribution through our Indian subsidiary.
Brilliant. Thanks, Kane. We have another question, which is, how hard is it to battle muscle of CrowdStrike, Palo Alto, and other US-based cyber providers for such big contracts?
Yeah, it's a good question. So as we move into the market, into that larger space, we're certainly not in these early stages taking on Palo Alto, and it'd be pretty foolish to do that. You know, they're a billion-dollar market cap company. They're certainly the leading security provider in the market, and they're doing a fantastic job. But we're concentrating markets that they are not in, and certainly our main competition is with a company called Fortinet. They have some challenges that they're facing, particularly in the Australian and Indian market where we are focused, and that's certainly who we're targeting against, and we're taking market share off them already, and we're proven through Gartner vendor comparisons that our products winning out in comparisons from a Gartner perspective.
Great, thank you. Moving on. So from an investor point of view, how much are you looking to raise and what's the next stage? So again, all of the amounts to raise and the financials will be in the offer document, but I think it'd be great to dig into what's the next stage, and in brackets they've put listing on the ASX or overseas question.
Yep, it's a good question. So we're entering stage 2 of our commercializations. We're moving out of that focus on small businesses now that we've gained our capacity and maturity. What that means is we've got our reference customers now, and we have been able to handle that service delivery build. What that means is as customers come to us for support when you deploy your product, either on cloud or on-prem or on-premise or both, we've now built that service delivery through small businesses. So it's much easier to handle, believe it or not, larger businesses because it's less volume, but you get better bang for buck in your return for sales. Now, the reason why you can't just jump into the mid-market or enterprise is you need your reference customers when it comes to security. So we've been inching our way up. So we first started off with $1,000 sales, and then it was $5,000 sales, and $25,000 sales, and 50,000, 100,000, etc. And you're building your reference customers up to then go after larger contracts. So the stage we're currently in is roughly around our larger customers, about a $400,000 sale. And we now have that 4 to 5 customer base, that $100,000 to $500,000 customer base. So now we can start going for contracts of 500,000 to $1 million. You start winning those contracts, you build up your reference list, and you build into that next phase. In terms of capital that we're looking to raise, that's between 1 to 3 million. And we're looking to do that to complete and execute on that transition to a sales company and to go cash flow positive over that 12 to 18 month period.
Great, thanks, Kane. I've got a next question that has 2 parts to it. So, firstly, staffing ratio of onshore versus offshore, and then the next part to that is how is sovereign capability being addressed with the government? Considering you're chasing the Indian market, are the messages being diluted with the Australian and Indian markets?
Yes, good question, and not at all. And there's a reason for it. It's ring fencing development. But I'm going to go back a step. I didn't answer the question on the ASX listings. I'll come back to that, sorry. But on the percentage of offshore and onshore, it's about 54% and 46%. Now, the way we're working very closely with the Defence Department, the way we're working through that sovereign capability is any development for defence-grade security, the development and manufacturing assembly will only be done here in Australia. And that goes the same for the Indian domestic market. We're currently working through a POC with the Indian Navy, proof of concept, sorry, with the Indian Navy, and they require the same sovereign capability. So any development or code for that domestic market, we do through our Indian capability, and we separate that out. Now, where a customer doesn't require sovereign capability of that high level of classification, we can obviously develop across the two. We can manufacture it either, and that'll be more based on geography and cost of sales. To come back to your question on the ASX listing, we actually looked at doing a listing way back in 2021 when markets were fantastic for listing. Since then, and if anyone wants to go through listing statistics in the technology space, there was only 5 technology space listings in 2022 and only 2 in 2023. So all up, there's only been 7 technology listings in that period. There's actually been more delistings than listings over the last 24 months, and it's just not the right timing for us. But we certainly have the spread of shareholders. It's within our sights for a listing. Our choice would probably be Australia. And we review this every February and July. So every February and July, we hold a meeting with our board, our executive committee, and our top 20 shareholders. And we go through the pros and cons of next stages, acquisitions, M&As, listings, and then those decisions are made, and then we report them to shareholders on the next shareholder webinar. We have 4 shareholder webinars every year at the end of each quarter. In addition, we have our AGM, which is held in the last week of November.
Great. Thanks, Kane. Moving on to the next question. So we've got, do you sell directly to customers or via business partners/distributors?
Good question. The answer is both. So when you're dealing with small and medium-sized businesses, they typically utilize what's called managed service providers or MSPs. Now, that's a B2B model. So we're working with MSP partners here in Australia, FX, Comwire, ComNow. Anyone watches any football, on the back of the laptops or the coaching boxes are all those names. They're the MSPs. So that's your business sales channels. Once you start moving into your larger clients, and that's larger medium-sized clients, larger enterprise clients, and certainly government departments, they have their own teams in place. So they certainly have CISOs and chief information security officers and engineers, and you're dealing direct. They don't utilize an MSP. So what we've done in the past is really concentrated in the MSP B2B model in those small businesses, and we've built that up now. We have 50 odd partners now on selling for us. We have 342 partners that we're onboarded and working through our funnel of sales enablement. And then as we move into that direct customer space, it's a separate channel, and what we call internally our enterprise channel. No real kudos for coming up with that name. But that's the addition of George Bullis and his team to really concentrate in that space, and we'll continue to sell into the SMB space through our partner channels that we've built in stage 1 of commercialization over the last 4 years. We've also now developed our online store. So as those partners become comfortable with our product and deployment, they don't have to speak to any of our business development or sales staff. They go straight onto our store, purchase, and then deploy themselves. So that sales channel comes down to about 1 to 2 weeks, whereas we find direct to MSPs is about a 2-month sales channel time period, sales cycle, and then direct works between 6 to 12 months. Much larger contracts. They work through typically proof of concepts for 3 to 6 months before you complete the sale.
Awesome. Thanks, Kane. Moving on to the next question. Is there a figure for the CAC in India versus Oz versus US?
In the what, sorry?
In the CAC. I don't know if, Michael, you put this comment in there if you want to just add more info, or if you got that, Kane?
Is that what they're referring to? Sorry, I didn't get the full question.
Is there a figure for the CAC in India versus Oz versus the US?
I'm assuming that's cost of sales or acquisition cost.
Acquisition cost.
Acquisition cost, yes. Yeah, so we're not really working on the US at the moment. Our US customers have come directly to us. So that acquisition cost has been 0. Winning the RSA Information Security Awards, which are very US based, they're based out of San Francisco, created credibility and validation for us, and those customers, those CISOs came directly to us and for them and now converted them over to fully paid customers. So obviously that acquisition cost for us has been minimal. Although if you want to go into the US market, obviously that's quite an expensive customer acquisition costs. So that's not something that's in our roadmap over the next 12 months. Now, in terms of India and Australia, the difference is about 12%. And a lot of people have this misconception that India is an extortionately cheap market, and it's certainly not. It's a very well established market, it's a very sophisticated technology market, and the cost or acquisition costs they equate to about 12% cheaper than here in Australia. Our choice on India certainly wasn't cost related. There was a glaring omission for security developers and providers there in the domestic market. It's a massive market. They have a nice affirmation with Australia, so it made sense for us to utilise that as our first international market outside of Australia.
Great. Thank you, Kane, and thank you, Michael, for clarifying. Moving on, are there any Achilles heels in your offering preventing a full suite offering? Else, customer might prefer a provider which provides a robust suite and select multiple providers.
Yeah, so at the moment, there's very few providers that can do a full consolidated security platform. So what that means is you have more than that average 76 cyber tools on your platform that you've developed and all working in synergy. The way I mentioned, most of the security providers are doing this and are selling it as a security consolidation platform, is they're just acquisition different tools and putting them through API, and it's creating lots of problems to architecture and vulnerabilities in the data being able to move across the platform. So we're one of the very few companies in the world that has the ability to do that through architecture development. So we're not having many blockers as such once in comparison to other consolidated security platforms. Our blockers are to do with adoption of new technology. So that's what we're focusing on, and I went through those blockers and what we need to do to combat against that. But that's our main focus. But no, once we run our proof of concept against utilizing multiple vendors, we haven't lost out. So we haven't had a proof of concept that hasn't transferred over yet.
Great, thank you, Kane. Next question. So why choose equity crowdfunding as opposed to other types of funding?
Yeah, that's a good question. I've had that question a lot from our existing shareholding base. We're utilising this as an additional layer. We've certainly got a capital raise ongoing at the moment, which we've just started. Most of our shareholders are looking to participate in that. But it was a good way to look at market brand as well, getting out to the market, and just that additional layer. And again, the suggestion that we were put to us was to get an additional spread, which you require for an ASX listing. So I'd never heard of CSF funding before. And when we completed the Australian Technologies competition recently in September, it was put to me then by the judging panel, had we looked at the Birchal group, which I didn't actually know existed, excuse me for that. So we sort of came down this road, and we decided to run an expression of interest campaign first, and then make the decision if we go forward on an investment campaign thereafter. But it was more out of interest to start off with, and I can certainly see the benefits of it for a number of reasons: the spread, and then obviously and the ability to do a bit of marketing at the same time of your brand, and which is something we really are pushing at the moment. We've got really good brand recognition in the technology information security space. We've got 4,000 odd followers on LinkedIn, and they're all of that information security space. But we're looking now to get our brand out there into the broader community, particularly here in Australia, and Birchal looked like a good opportunity to do that.
Yeah, absolutely. And off the back of that, in terms of the more general public marketing, what does that look like for Red Piranha moving forward?
Up to date, we haven't spent a lot on marketing or sales. We've spent a lot of our investment, a majority of a portion of our investment into development of the product. Going into the security space is very different to other technology products. You don't have an opportunity to fail, particularly in your early days. If you fail in a security product in your early adoption to market, you'll get pushed aside very quickly. So that was why we had that very deliberate go-to-market strategy into small businesses first to gain our capacity and maturity. But also we've put all our funds into development of the product. To give an example, our sales team's been made up of, my brother, who's the founder of the company, my sister, who came to us with no technology experience whatsoever, myself, who had no information security experience, and a good friend of mine, Kevin, who had no technology information security space as well. So that was our sales team to start off with. And we've managed to generate, as I said, in excess of 9 million in revenue there, but most of this was done through our founder in Adam. And that obviously poses a key person risk. And now that we have the product to the position that it's at the moment, where we've run through all our validation, we've gained all our certificates and accreditation, we've gained all our awards, Gartner reviews, we've certainly run it in a major environments, not just in the small businesses now, but enterprise as well. We're ready to really invest in that sales and marketing and really promote ourselves, not just here in Australia, but on a global scale.
Yeah, awesome. Awesome. We've got a next question, which is the current leadership group providing their own funding to support the next phase?
The current leadership group has provided the majority of the funding to date. Going into the next phase, we're all a bit tapped out. We've all put a lot of money in, we're all remortgaged houses and so forth. But we've certainly funded the majority of the business to date, as we have with a couple of angel investors as well. Our top 10 shareholders are made up with those involved in the business and one majority or 2 or 3 majority angel investors.
Brilliant. Thank you. We've got next question. What is the value of the company with this raise? And you obviously don't have to be completely exact. You can just give a rough ballpark if you want to answer.
We haven't set the valuation for this raise. The current valuation of the business is 26 million, but that was done back in our last raise, 2021, going into early 22. And obviously since then, there's been a major reset of valuations, and we're certainly quite cognitive of that. And we're canvassing the market at the moment on valuation, but it hasn't been set yet. And the part of the Birchal campaign was to assist us with setting that valuation.
Awesome. Thanks, Kane. You mentioned it was a family and friends affair when you were listing just previously. So when you kicked off in 2021, how did it feel using the product for you guys?
Yeah, it was interesting. It certainly is a family affair. Both my sisters, there's 4 of us, my brother and my 2 sisters, we all worked in the business. Brother's wife was in the business and still is. One of my sisters is no longer. She's since had many, many kids. So it certainly has been a family affair, not just of family, but friends were first employed to come into the business. So when we went live, most of our customers were friends and family of our network. So we did live testing, which is, it's a big risk for customers to take on. You're running security in live networks, and they're prone to being hacked with your product. So it was a massive risk for us, and we tiptoed our way through that. We actually started live testing back in 2018, our first live testing of our product into networks. And then once we were complete, after solid 18 months, 2 years, we went out to the broader market and went commercial as such. And look, it's been a journey that we've been really proud of. We've got some really strict KPIs and service delivery levels for support. And those 50 plus customers that have completed Gartner reviews, which, as I mentioned, are really difficult to get, a real testament and validation to our product live in network and testament to our support in teams in itself. We really take our customer support at the highest caliber. You can't go into mid-market and enterprise markets with unhappy customers. It's that simple. So we're very proud of our customer base and the level of support that we're offering them.
Definitely. And actually off the back of that, you mentioned in the presentation that you had some very happy customers. And I know community is at the heart of what you guys are doing. So how are you going to keep that at the heart of everything you do as you grow?
Yeah, it's a really good question. The 2 challenges that we're faced with on that aspect of the business are obviously staff and customers, right? Staff retention and customer retention. Staff retention is a really difficult one because once and this isn't the first time I've been involved in scaling business. I went through this with my own business. But when and Adam and I, brother, have been working through this, when you move away from sort of 20 odd staff, you really lose touch of staff. And certainly you start concentrating on what I'll classify the non-performers, and you spend less time with the high-performing staff on your employment list. That creates a massive problem. The ones doing all the work get very little touch and hugs and feedback, and the ones that are non-performing, you're spending all your time trying to get to perform. So it's a major challenge in the business, and adding Helen Rollinson into the business as our Chief People Officer has had a huge benefit and boost to the business as we move away from a startup family business to a scaling mature company. In terms of customer retention, we have what's called an NRR or customer retention of 168%, which, if anyone understands how NRR works, it's a fantastic number. Don't be fooled by that. It's a bit skewed at the moment because our customer licenses range from 12 months to 3 years, and most of our customers are in a 3-month life cycle, a 3-year life cycle. Those we've only just gone commercial in recent years, a lot of those customers will come up for renewal over the next 24 months. So we'll get a real feel of customer retention over the next 12 to 24 months, and something that's a major focus for us. But I will say, once you displace best in breed security and you replace it with a consolidated approach, it's a very, very sticky business. And Gartner came out in 2022 and said consolidation is not only the way forward, but it is the stickiest security offering that companies can have. And it's because customers, once they choose you and you get over that hurdle of adoption of technology, they very rarely move because you're embedded in their network, you're working across multiple tools, protecting their network security, and it's much easier for them to work with you than to move to another consolidated security platform, which is a different approach to best in breed. If you're a single point security provider and you're not performing or such, or something's not going quite right, it's very easy for the customer to swap and change into another best in breed. But as a CSP provider, once you're in the network, you work with your customers on any challenges, and it's very, very sticky business, which is one of the advantages, but also one of the challenges. It's something we have a very robust system in place on customer retention.
Awesome. Thank you. You've said that you're ranking well against the competition. And can you tell me a little bit more about what makes you different and how you stand out from those guys?
Yeah, so what makes us different is all in our architecture. So we've built every system from the ground up. Now, what that means is data is what's called very dirty, and data doesn't really talk to each other, particularly if it's coming from different systems. And the best way that's been explained to me, it's as if someone in France is on the telephone talking to someone in Japan in French, and someone in Japan is talking to someone in Australia in Japanese, and the person in Australia is trying to talk to both of them in Australian English all at once. And you can imagine all that conversation all at once going on. It creates some flaws in the conversation. Well, that's how data transfers across networks, particularly if you have different systems from different companies that's not developed in architectural alliance. What separates us from our competitors, we have not added in technology development in that way as such. So we've built the systems from the ground up, but we've built that in mind to add in future product development. For example, we're adding in fraud detection this year. Now that's all in play in the roadmap, but not just this year. We have this in thought for 10, 20, 30 years down the track. So the way the architecture was built from the ground up was to allow that to happen. Whereas all the old systems that were built a decade ago, and that's what customers are dealing with now, they're just adding on layer and layer and layer of security that was not built that way, and it's creating exploits and vulnerabilities. So what that allows us to do is have so much more traffic go through our system. And what we visualize is what's called incidents of compromise. Now we're seeing in excess of 18 million incidents of compromise every day across our system. Now you collect all that intelligence. That's how you create your actual intelligence, your machine learning to buffer against the exploits coming in from hackers. So that threat intelligence is what separates us. And the reason why we get that threat intelligence is because of the way the system's been built from the ground up and the way it's been architecturally designed for throughput across our network. Now that is being validated through the Cyber Threat Alliance out of Washington that I mentioned, where we rank in the top 3 for threat intelligence globally, month in, month out.
Awesome. Thanks, Kane. We might wrap with that final question. Thank you so much, Kane, for such an insightful presentation, and thank you everyone for joining today's webinar. As I mentioned earlier, a recording of this video will be sent around to everyone who registered in case anyone missed out. The expression of interest campaign for Red Piranha is live for another couple of days. So if you haven't already, jump onto the Birchal platform and check out their company profile. The early access offer campaign will open on the 19th of November. So make sure you get your expression of interest in to have an access of the offer document and all the key terms of the offer before it goes live to the public. Thanks again, Kane, and thanks everybody. Goodbye.
Thanks a lot.
Thanks.